Welcome. Let's take a look now at a risk event for the week starting Monday, the 10th of July. For this, we're off now to our Johannesburg newsroom and joining Warren Venketas, who is with us with a look at an event to watch out for, which could give us a trading edge. Warren, what do you got for us?
Hello, Jeremy, and thanks for having me. So the risk event I'll be focused on for next week centers around the RBNZ, or Reserve Bank of New Zealand, and their interest rate decision. Subsequently, I'll be looking at the AUD-NZD currency pair. Just a bit of background on interest rate decision. As with many major central banks around the world, RBNZ has adopted an aggressive monetary policy, but this seems to be coming to an end. And market expectations are for a rate pause with roughly 90% probability next week. That being said, if we look at the RBA, they're still priced in for roughly 2 more rate hikes in 2023, whereas RBNZ, there could be the potential of 1 more rate hike, or perhaps this could be the peak. So I don't expect any surprises going into next week. I think we'll remain with a rate hold, following on from the RBA as well as the Fed, in order to analyze internal or local and external factors, in order to get a better gauge of the overall New Zealand economy. So taking into account that there's the interest rate differential between the RBA and RBNZ, I think that will generally favor the Aussie dollar moving forward, just based on the carry trade appeal for the Australian dollar. But if you look at the technical analysis side of things on screen, we have the AUD-NZD daily chart. We can see in 2023, there's been no real directional bias, with price action fluctuating in and around the 50-day and 200-day moving averages respectively. But carrying on with the moving average perspective, there could be a golden cross forming, where the 50-day moving average in yellow crosses above the 200-day moving average. So if that comes to fruition, that could augment the upside bias going into next week's RBNZ rate decision. That being said, if we look at the 200-week moving average on the weekly chart, there is a significant level of support just above the 107 support handle. So I think between now and then, there is room for further New Zealand dollar strength. But I think overall, we'll be looking at a long setup heading into next week's decision, and that could open up the 108 psychological handle and beyond.
Lovely. Thanks so much indeed, Warren Venketas from our Johannesburg newsroom with a look at a trade around the Kiwi rate decision next week.